Hey, good morning, it's Owen, Bigland. This is the Inside Edge video blog. Are we in a bubble in the Vancouver real estate market, and is that bubble about to pop? It's the age-old question that's been around for, 20 or 25 years. As long as I've been in Vancouver real estate, that question has been around. Yet the market continues to roll forward. Don't get me wrong, we do get what I would call run-of-the-mill or normal market corrections every 2, 3, 4 years here on average. The last correction we had was in 2012. If you blinked, you missed it. But it lasted about 6 or 7 months. Prices on average dropped between 8 and 12%, depending on the product. Then come spring, summer 2013, the market took off again, and it's been on a roll ever since. So we're now over 3 years into this bull market. I would say, yeah, we're probably we're overdue for at least a leveling off or a correction of some sort. Whether that the correction is 5% or 10% or 15 or 20, your guess is as good as mine. If you've been watching my blog here for the last 6 years, you know I don't make predictions. Nobody can with any accuracy, so why bother making predictions? I've always said that if you've got the money, if you've got the need, if you've got the down payment and can afford it comfortably, and you've got a long-term horizon, buy that property, live in it, enjoy it. 20 years from now, you'll look back on it as the best investment you ever made. And it's as simple as that. So UBS, the bank, European bank, came out with a report a couple of weeks ago saying that Vancouver real estate was the most overpriced market in the world. Nothing new there. I've read probably a dozen of these reports over the last 6 or 7 months. Bloomberg Business came out with one about 6 weeks ago saying essentially the same thing. The fundamentals just don't make sense in the Vancouver market. It's overheated and severely overpriced. Well, go back to the blogs I was doing 3, 4, 5 years ago. I've done lots of blogs on this, people, and I think you know that. The Vancouver real estate market has been forever overpriced, and I'll post a few articles here at the bottom of this blog linking you to the fact that Vancouver real estate has been like this since the 80s. Back in the 1980s, the headlines were the same thing. That's when you could buy a detached home in Kitsilano for $220,000, and people thought you were nuts paying that kind of money. And now they're selling for $2.5 million. It was only 12 or 13 years ago you could have bought a detached home in Richmond for $400,000, and people were saying at that time you're nuts to be paying $400,000, and yet here we are. Those homes are selling for $1.6 or $1.7 million today. So we are going to get a correction. I don't think it's going to be a bubble, which would indicate a 50% correction or more. I don't see that happening, but a run-of-the-mill correction of 5 to 15% maybe we're due for. But the thing you want to remember as well with these articles from UBS and Bloomberg and the Wall Street Journal, a lot of them base the fact that we seem to be overheated and overvalued based on fundamentals. And I've blogged about this for a long time. The Vancouver market has unhinged from fundamentals about 15 years ago. Go back to my earlier blogs on it. The Vancouver market, as I've said all along, is an equity-based market. It's people that have owned property in the Lower Mainland for many, many years and have ridden the market up. Bloomberg and Wall Street Journal have both run articles recently on what's called this phenomenon called halfers. A halfer is a person, a couple who sells their detached east side home in east side of Vancouver or west side or Richmond and gets $2 or $3 or $4 million for it, and then takes $2 million off the table and then buys a $1.5 or $2 million condo in Cole Harbour. They're set for life. So the market has a lot of those. I'm dealing with them all the time that are buying townhouses for me. They've sold their detached home for $2, and now they're buying an $800,000 or $900,000 townhome. So it's an equity-driven market. The other thing, of course, is it's a low interest rate-driven market. I've done lots of blogs on that before. That condo that you could have bought in Yaletown 6 years ago for $450,000, your mortgage rates were at 6.2%. Today, that same Yaletown condo is at $600,000, but you can lock in a 3-year rate at 2.2%. The affordability is actually cheaper now than what it was 8 years ago because of those low interest rates. So are we in a bubble? I would tend to say a bubble meaning a 50% correction or more. No, I don't think we are, although I don't make predictions. I'm just throwing it out there. But hey, eventually this market will cool, and I think we probably will get a run-of-the-mill correction of a 5 or 10 or 15%. There's also an awful lot of money on the sidelines. I see it all the time. People that have got a fairly good sized portfolio of real estate, they're always looking for additional rental properties to add to their portfolio. They're waiting for a time maybe when we're not as many bidding wars, where they can put an offer in, negotiate it, and hey, if the prices come down 5 or 10%, even better, I'll wade back into the market with these low interest rates and purchase another unit. So it has a floor based, Vancouver does, on the prices. A 5 or 10% correction tends to get some of these long-term investors back into the market again. But only time will tell. I know some people are going to not like what I have to say, that we're not going to get a 30 or 40 or 50% correction like some people are calling. Sure, we're not, when it comes to fundamentals, our market looks grossly overpriced. And it has for the last 10 or 15 years. But again, I can't stress enough, folks, we're not really based on fundamentals here. What a person earns as opposed to what they have to pay for housing. It's an equity-driven market, a low interest rate market. Foreign capital, of course, is also causing some of it as well. And a lack of supply. I'm Owen Bigland. As always, thanks for watching. I'll see you next time.